1,305,500 shares valued at 25.67 billion naira were traded in 23,170 deals, showing a 9% improvement in volume and a 17% rise in turnover, as well as a 5% increase in the number of deals compared to the previous trading session. Out of the 128 listed equities that participated in the day's session, 29 recorded price gains, while 35 posted losses. Of course, CNI Leasing led the gainers chart, appreciating by 10% to close at 4.62 kobo per share. Len Africa followed with a 10% increase as well to close at 4.18 kobo per share, while Mutual Benefit Assurance also gained 10% to settle at 1.10 kobo per share. University Press rose by 9.82% to close trading at 5.48 kobo per share, while Deep Capital and Living Trust Mortgage Bank gained 8.64% and 8.39% respectively. On the flip side, Transcorp Power topped the losers table, shared a 9.98% to close at 295 naira 70 kobo per share. Owando lost 9.97% to close at 58 naira 25 kobo per share. Ella Lakes also shredded away 9.87% to close at 4 naira 29 kobo per share. Omatech Venture declined by 9.33% to close at 68 kobo per share. Other notable losers include Custodian Investment, which fell by 8.63%, and Sterling Financial Holdings, which declined by 8.55%. In terms of trade volume, Zenith Bank recorded the highest volume of traded shares with 69.2 million units of shares valued at a whopping sum of 102 billion naira. Guarantee Trust Holding Company also got 83.4 million shares. United Bank for Africa and Access Holdings also recorded significant activities, trading at 65.2 million and 64.3 million volume of shares respectively. Now, where we go from that, now let's quickly go to look at another story here bordering on the fears of tanker driver or marketers as they reject Dangote's fuel distribution plans. All marketers under the aegis of the Petroleum Product Retail Outlet Owners Association of Nigeria have raised concern over Dangote Petroleum Refinery's plan to distribute fuel directly to filling stations and other businesses nationwide. Petron warned that the policy could lead to job losses and place Dangote in a monopoly-like position with a production capacity of 650,000 barrels per day. Petron argued that the Dangote refinery should be competing with global refineries not operating as a distributor in the downstream sector. This massive refinery, one of the largest in sub-Saharan Africa, is expected to satisfy domestic fuel demand and export surplus product outside of the country. The oil dealer said in a statement signed by Petron's public secretary Joseph Obele on Monday. Petron said it had previously raised the alarm about Dangote's intention to dominate the downstream sector, citing concerns that the company may leverage its market power to fix prices, limiting competition and exploit consumers, much like it has done in other sectors. The association warned that Dangote's tactics might include a pricing penetration strategy where it would reduce prices to capture market share with the ultimate goal of forcing other filling station operators to quit the market. For me, I think this is just too alarming coming from the oil marketers. These fears being entertained, for me, is not really necessary, because at the end of the day, Dangote's refinery is not only registered to refine. Maybe when you look at the registration document CAC, you find out that they are also involved in distribution value chain. Many of the oil companies in Nigeria are involved in production as well as distribution value chain. So if they have that clause in their company registration document, of course they can involve in distribution. Whatever argument you are having may not fly, because we're operating a capitalist system of economy, which means that there's open market and open competition. Everyone can afford to do their businesses regardless of whether or not they have the resources to push their businesses to the neck of the final consumer, because the final consumer is not pepped up. What the final consumer wants is a better price and, of course, easy access. If, for example, my seller or supplier of diesel says he wants to bring the diesel to my company or deliver the diesel to my company yard after purchasing the diesel, am I going to say no, he shouldn't do that because it's going to disrupt the businesses of transporter who is going to gain from that business value chain of transporting the product to my station and get money from it? I wouldn't say that. So this argument for me is also from a monopolistic side of things, where these marketers also believe that they are the only ones saddled with the responsibility of distribution or marketing. So any other person who is already in production or refining cannot come into the space. I don't quite agree with that. Don't forget that these tanker drivers too, some of them are also part of members of this Petroleum Product Marketers Association. They've been protesting. In fact, they are on strike. They started a strike last week over what I could not really understand, and that has established a great gridlock over there in Lagos, affecting other tankers who want to access the Dangote refinery to lift products. And this has been one of the challenges that many refineries are facing. When you already have the product on ground, there's usually this gridlock, lack of access to get the product. Sometimes the tankers who lift them will give several conditions before they can lift products, and this would eventually affect the availability of the product. And when the product becomes scarce, it is the marketers that benefit from it. So if tankers don't lift product from the refinery to distribute to the various retail outlets across the country, the final consumer cannot get product. And once they don't get product 1 or 2 days, the price will be jacked up by the marketers because of scarcity. So in order to take away all of this bottleneck, a producer or refiner has come to say, okay, I would cover this value chain. I'll bring in CNG tankers and take away the cost of distribution from the hands of these retailers, so that they can get the product as at when due easily, as well as getting the product across to the final consumer. I mean, that should make the product even cheaper, because the cost of logistics of moving it from the refinery to the retail outlet would have been out of the way. So I don't see why we are having alarm, but of course, everyone has got business interests, so they're trying to protect their own business interest on that one. Now let's go over to the banking sector. You recall that recently the CBN has intervened, as well as the Nigerian Communications Commission, in the issue of USSD indebtedness by the bank to the telecommunication operators, and they've been able to find a way to resolve it. This time around, going forward, they've said that this deduction being made from the bank account will no longer be the case. That is going to be made from the airtime of the users of USSD service. So many of the banks proud to now, after this directive by the NCC, had rejected this, that they are not going to allow it, that they wanted it deducted from the banks, the bank account. But as we can already tell, some banks are already complying. Guarantee Trust Bank to begin 6 naira 98 Kobo USSD fee deduction via airtime on Wednesday, referring to today. Now let's go into the details. Guarantee Trust Bank is joining other banks in adopting a new billing model for its unstructured supplementary service data banking transaction on Wednesday, referring to today. According to a message sent to customers, the 6 naira 98 Kobo per transaction fee will now be deducted from airtime balances rather than bank account starting today, June 18th, this year, 2025. Dear customer, the message read, please be informed that effective 18 June 2025, the 6 naira 98 Kobo USSD fee will be deducted from your airtime balance, no longer your bank account. Thank you. The message read. Now, this development reflects a broader industry realignment mandated by the Nigerian Communications Commission, just like I earlier told you, in collaboration with the Central Bank of Nigeria to resolve the persistent dispute between the telecom operators and the banks over unpaid USSD service charges. The information was reported that the NCC had directed deposit money banks to start deducting charges for unstructured supplementary service data transaction directly from users' mobile airtime. Recall that in the past, banks billed customers via their bank account while automatically passing on the USSD usage costs to telecom companies. The telcos, however, protested that banks were profiting from the service, yet delaying or avoiding payment for the infrastructure usage and leading to debt estimated at 250 billion naira by the year 2024 last year. To address this imbalance, the NCC introduced an end-user billing model, telling banks to remit debt and switch fees to airtime billing only after clearing historical obligations. Under the new model, users will receive a prompt at the start of each USSD session, and the airtime will only be deducted upon confirmation, provided there is sufficient balance. Okay, I think this development for me is far better than the previous one. This gives also the customer the leverage to make this payment via their airtime. I think this is more convenient because many of these deduction that happens in our bank account usually deplete our account, beyond what we expect. Sometimes you're expecting to see a balance of, 2,000 in your account. When you get there, because you carry out a USSD transaction, they already done some deduction, and the deduction was even as high as 150 before it came down to 30 and 15 naira as the case may be. And according to the telcos, the bank were profiting from it, so they charge us more from our bank account and pay less to the telcos. But at the end of the day, they even remained indebted to the telcos to the tune of over 250 billion naira as of last year 2024. This led to protests by the telco suspending USSD transactions from all banks. But in resolving this now, the NCC with the CBN has intervened and ensured that this time around is going to be a deduction from the end user's point of view. That is the final consumer. You are the one using the service, so whenever you dial the USSD code in your phone, you are going to be charged from your airtime, and once the confirmation is done, then you can now go ahead and carry out your transaction. This is a win-win for both parties, so that we don't continue to have the dispute between banks and telcos over the USSD charges. Now let's also go back again to the discussion around truck drivers who have suspended their strike. I told you earlier on that they went on strike over some issue there in Lagos. They begin talks with Lagos State government. What is the reason for the strike? If I can recall, they went on strike because of the call-up system that has been introduced at the various ports, particularly in the Lagos ports there, where they were to pay, I think, some amount of money before accessing the ports, and they say that amount is too much. But the Lagos State government initially had claimed that they even pay more than that to their Truck Drivers Association, who doesn't also contribute any infrastructure to the road or to the port. So the Lagos State government was going to take it upon themselves in enacting a new law to guide the way and manner this truck approaches the port or access the port, and also having them to pay some fees where the government can earn money to continue to maintain the infrastructure of these ports. Now let's go into the details now. They've decided to call off the strike. The Independent Petroleum Marketers Association of Nigeria has suspended its ongoing industrial action following the Lagos State government decision to open dialogue with the association over the contentious 12,500 electronic call-up levy imposed on tankers along the Lekki-Epe corridor. In a directive issued to all zonal and depot unit chairmen on Tuesday, the association said they moved to suspend the strike followed a formal commitment by the state government to engage key stakeholders, including IPMAN's National Executive Committee and the Nigerian Association of Road Transport Owners, NATO, for a amiable resolution of impasses. The strike action was initially triggered by the introduction of a new call-up levy and the accompanying levy, which operators are described as arbitrary and an additional burden on the cost of doing business. A statement signed by the association's National Secretary James Terumun Tor read in part that the above subject matter from the letter forwarded on the 13th June 2025 refers that the Lagos State government has agreed to engage the National Executive Committee of the Independent Petroleum Marketers Association of Nigeria and the Nigerian Association of Road Transport Owners for amicable settlement of the proposed 12,500 naira levy. Sequel to the above, you are directed to suspend the strike action and resume normal work to allow time for amicable resolution. We appreciate your cooperation, urging all IPMAN members to remain united, vigilant, as we continue to engage the Lagos State government in pursuit of a fair and favorable outcome. Okay, hopefully this will bring about a better resolution on the matter. Lagos State wants to charge 12,500 naira levy for the call-up system. The Association of Truck Drivers and as well as IPMAN and other related bodies are saying this levy is arbitrary and they are not ready to pay because they already paying some levies related to that for the Association of Tanker Drivers. But the Lagos State government is saying these guys are paying this money to the wrong hands and these monies doesn't contribute to infrastructure of their states. And where we go from that story now, let's touch down on Nigeria ranking third as Africa's startup hits $1 billion US dollar. Nigeria's startup have emerged as the third highest recipient of funding on the African continent in the first 5 months of this year, 2025. This was disclosed in the latest Africa, the Big Deal, a platform that tracks funding to African startups. At the end of May, Africa startup had raised over $1 billion US dollar, which compares favorably with 2024 $750 million US dollar over the same period. For instance, also encouraging is the fact that startups in Africa have raised 2.5 billion US dollar over the past 12 months from June 2024 to May 2025 this year, the highest total for 12 months since early last year. A geographical spread revealed that Egyptian startup came top, with 332 million US dollar, a 31% increase, followed by South Africa with 273 million plus 26%. Then Nigeria follows suit at 162 million plus 15%, while Kenya follows suit at 132 million US dollar plus a 12% growth there. Okay, good for Nigeria. If we're improving at third position, maybe we can as well take the first positions just like Egypt. But that's that for what we're doing as far as raising fund for startup in African continent. Bright Amalgam is my name. Sign out of the show today saying thank you for joining us. Of course, tomorrow I'll be right here with another interesting package of the show. Bright Amalgam is saying bye for now. Have yourself a wonderful business day.